morning. Welcome to India's first live streaming business news service. This is Bloomberg Quint.
And Indian Open, I'm Neeraj Shah.
Good morning, I'm Meera Dugal. Let's get straight to the headlines. Asian markets open mixed despite a positive handover from Wall Street. The SGX Nifty hints at a muted start for the Indian markets. A 50-50 chance of a rate cut today if the MPC chooses to focus on growth. Consensus, though, points to a status quo policy. The government cuts excise duty on petrol and diesel. Prices get cheaper, but will the cut lead to a tax collection drop? 13,000 crore is what the government has said. Bharat Forge and RK Forging cheer as multi-axle truck sales jump 60% in the US.
Well, there's some cheer, maybe for individual stocks, but quite unlike the last few sessions. Good morning, people. The markets don't look like they'll start off with a big cheer. Yes, the handover was marginally positive. Asian markets are trading marginally positive, but quite unlike what we've seen in the first 2 days of this new series. So we'll have a start which is slightly muted or marginally into green, but that's about it. Let's see what happens during the course of the day. I'm guessing the monetary policy will set the tone towards the latter half, but it's just becoming so difficult to predict trends in this market over a short term, because the 3 days, the three penultimate days to the expiry, we decoupled from what was happening in the globe and came off sharply. Just when everybody thought this behavior will last, we came back very, very smartly for the last 3 days. So very, very difficult to predict what's happening on the benchmark indices over a period of 1.5 to 2 odd weeks. That's just become completely impossible, and therefore no point trying to guess that. Options data, however, suggests that for now there is a very broad band of 9650, 9700 to maybe 10,000, 10,100, where traders seem to be betting on, and I don't blame anybody. It's just, as I said, so difficult to predict the short term. So what to watch out for? I think today it's a no-brainer. The monetary policy and the Bloomberg poll, of course, suggests that will be a status quo. So maybe no surprises there. Let's see, wait for the commentary and then see the impact on banks, if at all. I think Ira will speak in detail about the excise duty cut as well, and that hit that it gets on the fisc and whether that weighs in a little bit or no. But that's something that we'll talk about a bit later on. A bunch of stocks as usual. I've picked up 3 or 4 which I thought would be the key stocks to watch out for today. So Bharat Forge, and yet another month. I'm forgetting now the count of months, but for the last 4, 5, 6 or maybe 10, the North America Class 8 truck sales continue to show a rising trend, up 60% YOY, 7% month-on-month, quarter-on-quarter. So that's looking extremely strong. Should react to trade today. Remember, was up about 4.5% in trade yesterday, by the way. Natco, a very, very interesting one. A partner for Mylan in Copaxone, and Mylan has gotten this USFDA nod for both the 20 mg and 40 mg version. We'll talk about that in detail, but this stock could well turn out to be the stock of the day, quite frankly. Watch out for Natco. Hero has registered good numbers. We've spoken about auto sales all through the last 2 days, but Hero MotoCorp came out post-market hours. Strong numbers, highest ever monthly sales. Should be interesting for Hero MotoCorp. And amongst companies which are reacting to management needs or funds buying into them, Hudson Agro could be an interesting one. It's a small quantity, but SBIMF is bought. Let's see if there is some reaction on Hudson Agro in today's session.
All right, let's get you what's on first word today. Several of the stories that Neeraj has covered already, and they continue to be focused here with the editorial team. First up, what's on the mind of the RBI Monetary Policy Committee as they meet today and take a call on whether to cut or not to cut interest rates. We'll also bring you more analysis on the latest US FDA approval for Mylan. It's great news for Natco Pharma. That will come up in just a bit. Bharat Forge, as Neeraj pointed out, also has a lot to cheer about as multi-axle truck sales hit new highs in the US. And finally, we tell you who's possibly in the race for the post of the US Federal Reserve Chair after Janet Yellen, or will Yellen get an extension? All of that coming up on First Word. But let's kick it off with the big news story of the day, which is what will the RBI do today? Now, I think Ira has over the last few days listed out the conflicting pressures on the Monetary Policy Committee, very, very well, and we'll give it back to her to take us through what she thinks will be the key issues that will dominate the decision-making today. Ira, inflation, expansionary fisc, we just saw the excise duty cut, or growth.
I think I think it'll have to, the discussion at the MPC will probably have to start with growth, and that judgment will probably form the basis of whether we get an interest rate cut or not. Going into this, let me start by saying that Bloomberg News has suggested that there is going to be no cut. That's the consensus view, but it's down the middle, 50-50 chance of a cut this time around. Let's look at the growth data, because I'm sure the MPC will debate it ad nauseum. The growth numbers at 5.7% GDP, 5.6% GVA just shocked everybody and led to a whole bunch of questions on what exactly is happening on growth, how much of this is transient, how much of this is structural, and that will form the debate. The RBI committee members will have to give their assessment of growth. The MPC members will have to make their assessment as well. And in making that assessment will lie the judgment on whether there is scope for rate cuts, because that will also give you a sense of what the quote-unquote output gap is, which is what the Monetary Policy Committee looks at very closely in judging room for further rate cuts. There is, of course, other complicating factors. The fact that you're getting into this debate for a rate cut at a time when inflation has started to normalize. So those months that we saw 1 point something inflation and 2 point something inflation have gone. Both inflation and core inflation in the last month have edged higher, and that's something that the MPC will have to take note of. As Michael Patra had argued last time around, you can't cut rates when inflation is on the upswing, but if the judgment is that the output gap is significant, then perhaps they will have to do a pivot to growth, as we have said on our copy in BloombergQuint.com as well. The third complicating factor, the fisc. This morning, if the MPC is reconvening after yesterday's deliberations, they'll be shaking their heads because you already have a situation where the government has taken out 96% of its fiscal deficit target, and then on top of that, you got the excise duty cut yesterday. Now, the excise duty cut may impact current inflation levels and may keep those in control. But the problem is in current inflation, besides as an inflation targeting central bank, you target future inflation. So if you're looking at expansionary fisc, then the MPC will have to think about that clearly to see whether you can have a scenario where both the fiscal is expansionary and the monetary policy, which is already expansionary, can get even more expansionary. So I think that is the judgment call that will be made. A quick note of how markets have moved between the last policy and this policy, and this number is up till last Friday. So bond yields are up more than 20 basis points. So bond yields are already factoring in fiscal slippage. The RBI will have to be very careful to word its statement to ensure that market interest rates don't rise further. The currency will be a factor as well. It will play into imported inflation. So the currency, which has weakened more than 1%, will be something that the MPC will take note of. Finally, guys, closing off by reminding everybody that there is a 200 basis point cut over this cycle already, and it's not a very charitable view to take, I know, because you never know what the counterfactual is, but in effect that 200 basis point cut has not really done very much for the economy, although the counterfactual is always there, that if rates had not been cut, what would have been the state of the economy, and would people have been able to refinance some of their liabilities? So that counterfactual is always there, but if you're looking at pure growth numbers, then you've got to question what these 200 basis points in cuts did.
We have an expert bond voice waiting by to tell us what the markets are poised like today, but I have just one thing to add to this conversation, and I think that is the known unknown of GST revenue, and that is really the one that will tell us by November, December, whether this government is on track for its fiscal targets, whether it has room to spend more, or whether we are doomed at, a fiscal deficit of doom is a strong word, sorry. A fiscal deficit of 3.5 or more if GST doesn't deliver what is anticipated. So to me, that's the only number we're watching for. And a tough one to gauge at this point in time, as all experts have pointed out.
Absolutely. Let's get across to our of Axis Mutual Fund is joining us on the phone line. Good morning, sir. Thanks for taking the early morning call. So what's the bond market asking for? I mean, I know that the consensus view is no cut, but is there a hope that there will be one?
The markets have basically walked away from any expectations of a cut this time around. It's clear expectation is of a pause, and this is of course in contrast with last time when I think there was a very clear expectation of a cut going into the August policy. So this time around, I think given the various factors you also discussed, which is the recent rise in inflation and especially the fiscal outlook, the expectation is RBI will be on pause.
So if you get a cut, sir, a surprise cut, will bond markets react at all, or will they still be focused on the fiscal numbers, especially given what you got yesterday in terms of the excise duty cut?
In the very near term, of course, any rate cut will be taken very positively by the markets, and you could see some softening. But when you look at it a little bit out, for example, a few months out, the dominating factor would be, especially for the long bonds, the fiscal deficit. So if there is a rise in the fiscal deficit, it's likely to keep some pressure on long rates. We already are seeing supply concerns thanks to state loans this year. And if we add additional central supply, it's likely that you will not see a big move in long bonds. A rate cut, though, will have a significant effect on short rates, for example, deposit and lending rates by banks, as well as short-term corporate bonds. And I think that's a segment which RBI may actually have the largest impact.
Sir, if you get a slightly more growth-focused, policy statement, what would you read into it? I don't know whether you get a rate cut now. Some people are saying December. But if you see a clear shift in focus from, inflation into growth, and they talk about the output gap, etc., how would the market and how would you read that?
That would be a very significant change. So the current market expectation is that the monetary policy stance remains neutral, and that is in contrast to the earlier stance pre-February, when the monetary policy stance was accommodative. So going back to an accommodative stance effectively signals that the RBI is seeing scope for multiple rate cuts from here on. And that would lead to a substantial downshift in the entire yield curve. That is a stance change which I think the market is currently not anticipating, but it will certainly have a big impact on markets.
All right, sir. Thanks for that quick call. Appreciate you taking the time. So that's where it is, guys. 2:30, we'll get the call. As Siva also said, rate, stance, nuances in the policy statement. There will be I didn't mention that, there will be a drop certainly in the GVA estimate for the year.
Yeah, I think that's what you've been mentioning in all your sort of heads up, videos in advance to this. I'm glad Siva mentioned state bonds. I think there was a JPM note last night also which suggested that there's been a 30% increase, and therefore if you combine state
borrowing,
state bonds, in addition, state bond issuance this year is running 30% higher than last year. That's the JP Morgan note. If that run rate continues, state deficits are likely to widen further, and the consolidated fiscal deficit in 2017-18 could be higher than last year. And all the smart guys look at the consolidated number, right, at the end of the day.
Yeah.
Because the central fisc may be in control, but if the state fisc is out of control.
So if you have a central fisc going out of control and a state fisc.
Yeah, so that I just wanted to, because Siva mentioned exactly that.
Yeah, no, I'm glad you picked that up. I missed that. So lots of questions.
Just one quick point out here. A lot of people who hitherto have been saying that no, there is no room for the rate cut, and the RBI should focus on inflation and crude having spiked the way it is and commodities doing what they are. Maybe there is less room. But we've seen some of those voices, Saurabh Mukherjee, for example, yesterday saying they're so concerned about the economy that they believe a 25 to a 50 bips is probably necessary. You don't know. I agree with Ida that 200 bips, whatever has been done till now, hasn't shown any signs of stoking the economy.
No, but I'm not using that to say that don't cut more. If the economy is that weak, I think it all comes down to the judgment on growth. What was that 5.7% number? Was it a one-off number? Where do you move from that? Where do you settle? Do you settle at 6.5%? Do you settle at 7%? That is the judgment that you have to make before you announce a rate cut.
Yeah. So the question is, will the RBI look at growth and do its rate trajectory, or will it continue to remain focused as it has been on inflation?
The judgment on growth, right? Like yesterday we saw the auto numbers and it was curious. We saw great numbers across the board for almost all companies, and there were like a couple of reasons for that. I know we will discuss that later on in the show as well. I think the early onset of festival season. So you're comparing September numbers technically with October numbers last year. So the big bump up is that last year there was no Dussehra in September. So suddenly these numbers look inflated. Secondly, I think just massive restocking at the dealer level, right? Because these are all factory gate numbers. And I think dealers were telling our colleague Krishanu yesterday, at least the auto dealers were saying that they're forcing inventory down our throats. And that is, hurting dealer financing. So, look, it's really, you look at the consumer numbers and you say, hey, wow, this suggests that the consumer side of things is holding up. Then you look at the RBI's consumer confidence survey, and that suggests things are looking down. And then you look at the dealer point of view and it's a completely different story. And PMI,
which was flat. So, if there was such an uptick in something like auto, for it not to have reflected in PMI at all, it was surprising to me. So, I think that, no sympathy for the MPC sitting there trying to make this judgment, but they're hopefully smarter than all of us.
It's easier to read the US FTA nowadays than reading GDP data or economic data in India, right, Neeraj?
Yes, you bet. But we'll get to know the RBI outcome at 2:30, and we have a packed lineup for that. So do stay tuned, or do tune in at 2 when we get you the RBI policy coverage. But from confusing news or unpredictable news to predictable news. And predictably will be a great day for Natco Pharma because there's a regulatory boost for the company and Mylan as the drug makers get the US FDA approval for their multiple sclerosis medicine. Darshan Mehta is standing by with more. Darshan, how big a boost is this for Natco?
This is huge for Natco Pharma. You know, it's been years since Natco has been trying to get this approval. Actually, over the past few, quarters, people had actually written off that, when this will come. But suddenly, in a twist that happened overnight, Mylan had issued a press release indicating that they have gotten the US FDA nod to launch Copaxone. And surprisingly, they've got it for both the versions because the analyst estimate for the 40 mg was supposed to be next year. So both the versions have gotten the approval. It's come in at a late time, but nevertheless, it's great news for Natco Pharma. Now, if you want to analyze this, both these drugs put together will be close to $4 billion. How is Natco affected? Natco is the partner for Mylan. So in the overall scheme of events, whatever money that Mylan makes, 1/3 goes to Natco Pharma. Natco will be manufacturing that drug and Mylan will be marketing and distributing this entire drug. So it's a big drug in the US. For the 20 mg, there have already been filers. They will be the second one that will be launched. Momenta and Sandoz had already launched it earlier. For the 40 mg, they are the first filers, and Mylan has said that there is a high possibility that they might get the 180-day exclusivity here. So that is a big boost that is coming in for Natco Pharma and Mylan. As far as what they can make, analysts say that on both these drugs put together, they can make sales of 100 million. Natco alone can make sales of $100 million, which is big for them considering their small US base. It's a very high margin drug. EBITDA margins will be margins for this drug will be in excess of 85 to 90%. So on the profit front, Natco is expected to make profits of close to almost $65 million on these two drugs. So for a smaller base on Natco, this is really big news, and this comes at a time when the analyst community was not anticipating this to come in very, very soon, but they have finally got the approval. So now I expect Natco to open with a big gap up opening in trade today.
All right, thanks very much for that, Darshan. Let's bring you one more perspective on what's going on in the auto space. The festive season, as you know, has already brought cheer to auto companies. You've got cars, two-wheelers, commercial vehicle manufacturers all witnessing a strong pickup in sales in the month of September. And that leads us to the question saying which auto component manufacturers are likely to benefit from this boost in sales. Yatin Mota standing by with an analysis of that list of winners. Yatin.
Hi, good morning, Menika. And if you look at the entire scheme of things, given the fact that there have been strong sales when it comes to the automakers, of course, auto ancillaries will benefit. Of course, this time it will be a secular run, given the fact that the commercial vehicle, two-wheeler, four-wheeler, everything has seen a double-digit growth on an average when it comes to the industry. So talking about specific stocks, Bosch, Forging, Bharat Forge, GNA Axles. These are the four companies which have high exposure as far as the commercial vehicle players are concerned. Their key clients include Tata Motors, Ashok Leyland and M&M tractor segment, which has seen, of course, 50% growth. So if you look at the overall setup, companies like Bosch as well as Forging and GNA Axles will stand to gain. As far as the four-wheeler players are concerned, we have Motherson Sumi, Sonaco Steering Systems, Ricoh Auto, JBM Group, which includes Jai Bharat Maruti as well as JBM Auto. These companies will benefit with the kind of growth that we have seen in Maruti Suzuki. So clearly that is one pack you need to watch out for. Apart from that, companies like Steel Strip Wheels, as well as other auto ancillaries like Seat, Mahindra CIE, all of these stand to benefit given the fact that they have very high exposure to clients like M&M, Tata Motors as well as Maruti. So if you look at the kind of setup all of these auto ancillaries have, the kind of capacity utilization that is expected to improve, and with the effects of operating leverage on the positive side, probably we could see some good margin expansion and sales growth for all of these names that I was mentioning.
Two-wheelers, Yatin, Endurance Tech, Munjal Showa, why would these benefit?
Yeah, so if you look at the two-wheeler space, clearly at this point in time, Endurance, which has a very, very high exposure to Bajaj Auto, nearly 1/3 of the sales come in from Bajaj Auto at this point in time. Of course, they are diversifying in the export market, but still they have almost a 30-40% exposure to Bajaj Auto as such. And also if you look at Munjal Showa, that is a group company or a sister concern of Hero MotoCorp. So given the fact that both Bajaj Auto as well as Hero MotoCorp have given strong sales for the past 2-3 months, probably these two auto ancillary names should also be in focus.
Okay, I think just a quick follow-up. It's not just the India sales, right? Multi-axle truck sales have shot up in the US as well. The news coming out this morning. How big a boost for Bharat Forge? Because I believe this has been happening for months now. It's not a new phenomenon.
Yeah, so it's not a new phenomenon, but clearly, Neeraj, the kind of momentum that we are seeing, especially post-December, for the past 8, 9, 10 months, we have seen a very strong double-digit growth when it comes to the Class 8 truck orders. And of course, companies like Bharat Forge as well as RK Forging stand to gain. Given the fact that almost 1/3 of sales for Bharat Forge coming from the export markets, the auto component portion, we have a significant delta which could be there because Bharat Forge has various factories and operations linked to the performance of the US commercial vehicle market, and with that market doing really well, the kind of operating leverage benefits and the kind of margins that they enjoy, which is in excess of 30% for that market, surely these are the two companies which will again see some positive momentum in trade today.
All right, Yatin, thanks very much for that. So that's a good heads up on what to expect in the auto space. We're more coming up for you on the auto space. But before that, we're not only watching the RBI today, or the Indian Central Bank, but we're also watching what's going on at the Fed. And that's because US President Donald Trump is said to have asked his colleagues to draw up a list of possible contenders for the post of US Federal Reserve Chairman, currently occupied by Janet Yellen. It's not clear whether she will get an extension or not, but she is on that list, as Bloomberg's Kathleen Hayes reports.
Not that the names are so new, Rish, but of course, yes, it's important as Bloomberg News breaks the fact that apparently Donald Trump's aides, as you said, they're putting up a short list. Now, we've heard a lot of names tossed around, but the fact that he said just yesterday, he told reporters, I'm going to make my choice, announce it 2 or 3 weeks. Well, clearly, he has moved this task, who's the next Fed chair, up to the top of the list. Let's start with Janet Yellen. Apparently, Donald Trump does like her. His aides have her name on the list. They're not so enthusiastic about her. Remember, Ivanka Trump requested a lunch with Janet Yellen to talk about some things Yellen said about women and women at work in a speech. So maybe that has some positive halo for Janet Yellen. But maybe the fact that she wants to raise rates, well, is something that Donald Trump would take a little caution about. Gary Cohn, National Economic Council Director, former president of Goldman Sachs. Gary Cohn, of course, we thought was probably the guy who would get it. A lot of people on Wall Street said, hey, that's not so bad. He knows capital markets, so he would be a good choice. But then after the Charlottesville violence, when he criticized what Donald Trump said, apparently reports that made Donald Trump very angry, and that kind of pushed Gary back down the list, but he has recused himself from this process. That seems appropriate. He is still in the running. Kevin Warsh, a lawyer, started out in M&A, was at the Fed Board of Governors. He was an advisor to the White House 2002 to 2006. His specialty is more domestic finance and capital markets. But people say Kevin knows politics. Kevin's an insider. He knows how all of this works. Plus, his father is Ron Lauder, friends with Donald Trump for years. They met in college. Ron Lauder, of course, billionaire, heir to the Estee Lauder fortune, and Kevin's married to his daughter. So, Trump loyalty, donations to the Trump campaign from the Lauder family, maybe that's a plus for Kevin Warsh. A couple more names. Jay Powell, also at the Board of Governors since 2012. He's been an investment banker. He knows banking very well, well respected in the industry, certainly at the Fed. There's nothing really, I would say, sexy about Jay Powell, except that he's solid, he's well respected, and I think he's the person maybe Donald Trump would say a little bit smaller profile, but inspires confidence. John Taylor, of course. Now, that was one of the first names that came to the top. Why? He worked for Republicans. He invented the Taylor rule. A lot of Republicans, conservative Republicans in Congress, want the Fed to follow a rule. John Taylor is all about that, but maybe he is not so much of a potential Republican insider with the current crop as someone like Kevin Warsh. So all the names apparently are there, and I think this is very interesting that, we're maybe finally going to know pretty soon here who the next Fed chair may be.
All right, the next Fed chair, we're all watching to see what actually happens. But on the show, here's what is going to happen. Stay tuned to Bloomberg Quint. We'll talk markets and macros with Madhav Dhar of GTI Capital. What's driving M&M stellar tractor sales? We'll ask Rajesh Jejurikal. And Kevin Desa of Bajaj Auto tells us whether the revival in sales is linked to the festive season and if it will last.
Okay, full tilt towards the day's trade today. Let's start off with a look at the derivative space. Agam Vakil is standing by with the FNS setup. Agam, good morning.
Good morning, Neeraj. We did see the Nifty move on about the mark of 9,850, and with that we saw fresh longs building in, considering the fact that the open interest moved up by as much as 3.6%, and it's the same for the Nifty Bank futures as well. We did see an increase of nearly 2% in OI, so we did see longs building up there as well. But two variables that I always keep an eye on, the first one will be the India Volatility Index, which didn't see any movement whatsoever. At the end of the day, it was flat, still below the mark of 12.5. But it is the Nifty put call ratio which moved up higher, considering the fact that we also saw the Nifty move up higher. What's happening in terms of changes in the open interest? Well, we saw the Nifty move up about the mark of 9,800, and that has resulted into more writing in the 9,800 put. Very little change when it comes to a lot of these call options, but we have seen some amount of writing in the 10,100 call. Moving in, we are keeping an eye on several of these stocks. Of course, one of them is JSW Energy, which has moved into the F&O ban. But we're looking at a substantial amount of fresh shorts building in Power Grid, where open interest has moved up by as much as 24%. And on the other hand, fresh longs building up in the likes of GAIL, open interest up 21%, and Voltas is the other counter which has seen a substantial accumulation of OI towards fresh longs. Those are some of the counters that I will be keeping an eye on as we move into today's day of trade.
This should be interesting. Thanks a lot for that, Agam. So those counters, we'll ask Abhijit Pathak about those. He joins us. He's the director at Definet Solutions. Abhijit, good morning. Thanks so much for joining in. On the index, is there a strategy, is there a thought that you have for the near term?
Yeah, as regards Nifty, it is approaching the crucial resistance of 9900, 9920. And if it crosses 9920, then I'm looking at least a 200-point jump in Nifty, because it breaks a very crucial resistance and there'll be a lot of short covering above that. And equivalent level in Bank Nifty is about 24,300, 24,400, after beyond which it can go up by about 500 points.
Okay, so you expect a pullback in today's session. If the pullback were not to happen and if it breaks 99.20, as you said, would you initiate fresh longs, Abhijit?
Yeah, above 99.20, it is a clear long. And like I said, the 10,000 call yesterday, the resistance of 60. In fact, yesterday's high was 60, after which it came down sharply. And if that also crosses 60, that can be bought again. At the same time, 25,000 monthly Bank Nifty call also can be bought around 40-50. And then you can have a good run on that, on those two.
Okay. Abhijit, Agam was just speaking about a few stocks which have seen significant long build-up. I don't know if you looked at the price movement and the build-up in stocks like GAIL and Voltas, but GAIL in particular has been having a few sessions now of strong moves. What does one do here?
Yeah, GAIL, I mean, like I said, it has been very strong over the last few sessions. But then again, entering fresh longs is a bit dicey because the stop loss is not clear unless a person is very disciplined to have a stop loss as the previous day's low. But if someone is carrying long, it should be just carried forward with the stop loss below the previous day's low. You can just ride the momentum as long as it lasts.
So ride the momentum as long as it lasts. Don't go out and initiate fresh longs on GAIL, is what Abhijit Pathak is saying. You have a strategy on the Bank Nifty as well as Jet Airways. Let's start off with the Bank Nifty. Would this be dependent on the index move today, Abhijit, or you would initiate a call on the Nifty Bank irrespective of what the Nifty does today?
No, I think both indices are poised for a breakout. That is my sense. And for that, either the 10,000 Nifty call above 60 or the 25,000 monthly Bank Nifty call near 35.40 can be good bets to take the trade in anticipation of a breakout. And if the breakout happens, then just ride them. Because this Bank Nifty 25,000 call from 40, it can go up maybe even up to 200 or 300. That is what the chart says.
Okay. Lastly, Abhijit, your call on Jet Airways. What's the idea here? Aviation hasn't been the strongest of packs. Why Jet Airways?
Yeah, because yesterday, I mean, over the last few weeks, Jet Airways has been sold off from 600 to 465, 470. And yesterday, it tested the previous bottom. And the movement in the options indicated that it might have bottomed out. The puts got sold off, the calls got bought fiercely, and even the futures got bought, and from the bottom it surged quite sharply. So that is a sign of a bottom, at least a short-term bottom. And if that holds, yesterday's low around 465, Jet Airways can go up to 520, 530.
Okay. That's interesting. Abhijit, thanks so much for taking the time out and joining us this morning. We'll watch out for both the key indices, which is the Nifty and the Nifty Bank, and Jet Airways, and talk with Abhijit tomorrow yet again at the same time about what to do with these strategies. Thanks so much for joining in. But it's not just about what's happening to specific stocks and specific indices. Commodities, while China is not giving us major cues, but crude, to an extent gold, are all looking subdued on the LME. And Pradeep Johnson on the show to talk about the markets, yes, but starting off with what could be happening in the commodity space. And Pradeep, good morning. What should one watch out for this morning?
Good morning. So, dollar has taken a breather after rising for roughly 3 weeks consecutively, and that's I think the strongest cue for us, because rupee also corrected quite a bit, and when rupee falls more than the movement on global currency markets is the impact on Indian commodities that we feel due to the forex, that is rupee. So in domestic market, all the commodities have been gaining because of that. So there could be some correction, because I would expect with dollar kind of taking a pause against other currencies. We saw long unwinding against euro, we saw long unwinding against yen. So it kind of gives an indication that maybe today we'll see rupee regaining some of the lost ground, although we have an all-important policy meeting today as well. To talk about the key commodities, gold has inched up marginally in yesterday's trade, but it's still quoting weak, so there could be more the expectation. The trade there is actually sell on rise if you look at the global trade setup. And also oil has taken has corrected quite a bit now, I'll say, because now if you look at it, Brent has slipped below 56 and WTI is also quoting very close to 50, and electronic trade you may see actually sub 50 levels if the trend really continues. So these are all kind of positive indicators for us. However, not so positive for sugar, because sugar has corrected by around 2% after 3 days continuous rise. So that is a bit negative for sugar as a commodity and also sugar stocks, we could say.
Okay, let's wait and watch for all of these cues. Quick check on how the Asian markets are faring this morning for the benefit of our viewers who are just tuning in right now on our website. Marginal tick in the green for almost all the Asian indices. There's SGX Nifty 2 indicating we'll start off, flattish if you will, but yeah, in the green for sure. Joining us now to make sense of the fundamentals, talk about a bunch of news that have come out this morning, as well as Girish Pai, Head of Research for Institutional Equities at Nirmal Bang. Girish, good morning and thanks so much for taking the time out and joining us.
Thanks.
What's your sense? What are you telling clients to do? It's becoming really difficult to predict the short-term behavior of the market, but hey, we're not here to do that any which ways.
Right. So I think the market is obviously expensive from an index standpoint. It's trading about 18, 19 times forward earnings. So it's not at the peak. I mean, peak is when you have bubble is when you have peak earnings and peak multiples. We are at expensive multiples, but we're not at peak earnings as things stand currently, because we've kind of compounded earnings at 5-6% rate for the last 8 years, or maybe a little bit more than that. Unlike in 2007 or FY 08, when we saw earnings compounding by something like 25 to 30% for 5 years in succession, and hit a peak multiple of maybe 22 to 25 times. We're not there yet. We are at something like 18, 19 times on multiples, and this kind of very slow growth in earnings. So when we see very strong growth come through is when we will say that, okay, we're in a bit of a bubble territory. So we're not there yet. I think hope is that earnings will pick up. It's the hope that we kind of carry every year. Start of the year expecting 15 to 20% kind of earnings growth at the index level to come through, and by the time the year ends we kind of come down to something like single digit. So that was a hope even this year. I mean, after many years we thought that this year would be the one where we'll actually see a breakout in earnings, which as things stand right now doesn't look like we'll see that high teen kind of growth. We'll probably go to low teen or maybe even high single digit kind of a index earnings growth. So I think we're not calling for a PE multiple expansion. Yes, there's fair bit of domestic flow. I think it all depends on earnings growth, which right now looks a little tardy. So I would think that market is kind of be around these levels or maybe go up and down a bit for a while. Sure. So it's going to mark time. I think next kind of up move is going to be driven by some visibility on earnings growth coming through.
Okay. Well, speaking of growth, I mean, there are a bunch of newsmakers as well in today's session, which we'll talk about. I do want to quiz you on Natco, for example. But before that, the auto sales. Fairly strong for almost all companies. Hero post-market hours very strong. Auto and auto components looking strong. Bharat Forge, the North American Class 8 truck sales, yet again, a very strong number that has come out. What would your thoughts be here? What stands out for you within this large pocket?
Right, so we've been positive on auto for a fair bit of time, and we've liked that area of the market because it's been giving steady growth. The large cap companies we've liked there have all become a little bit expensive, so we're not kind of recommending them very aggressive right now. When I say large cap, we talk of Maruti and Hero Honda. The auto numbers that have come out for last month have been very good, and that's because the base month is not going to be very strong, because you're talking of primary sales into the kind of system, because you need to build up the backlog for the strong sales that are going to come through for Navratri and Diwali and stuff like that. So year on year there's going to be a fairly strong number. What stood out was probably the MHCV number. I thought the MHCV growth was probably not as strong as what market was expecting. It was stronger than what market was expecting. So I think otherwise, I think the growth has been broadly along expected lines. I don't think there were any kind of great surprises there.
So continue betting on Ashok Leyland and the likes?
We don't cover Ashok Leyland, so I'm not recommending that particular stock. But as I said, the stocks that we've liked in the large cap space have been Maruti and Hero Honda. They've become a touch expensive. But if you're willing to hold on for a fair bit of time, I think those are the kind of large cap stocks we kind of are pushing at this point. The other stock we've kind of like even at these levels is a stock called VST Tillers, which is it's an agri-machinery play. It's into tractors and tillers. So where we think that the new area it's getting into tractors is going to drive growth for it over the next many years, because it's a new entrant. It doesn't have too much of market share out there. It's going to increase the product portfolio that's got. So it's getting into higher HP tractors going forward, and it's going to gain a larger market share of the entire tractor industry. So that I think is a player we kind of would want to bet on even as things stand right now.
Mm-hmm. All eyes are on RBI today. So the rates are already at 7 years low, so to say. If there is a cut, or whatever RBI says or doesn't say, does that meaningfully alter your projection on companies, specific sectors, stocks at all?
So specifically on rates, our house call is that we've seen the bottom of rates. We are not going to see any kind of serious movement downwards on rates. In fact, our view is that the next move on rates is probably a raise, and that's going to happen in the first quarter of the next fiscal in FY19, because we think that inflation has kind of bottomed out. Inflation will only rise from here, and by the time Q4 FY18 comes, we believe that the CPI inflation will be a little higher than where RBI's own projections are. So we think that the next move is going to be a raise. It may not be a uptick for a sustainable standpoint. It may not be like a big raise coming through over many quarters and stuff like that. But it'll be a raise is what we believe. So we kind of bottomed out. So from that standpoint, I think it may be a little negative for NBFCs, because I think they've been beneficiaries of low market rates. They've been borrowing money from the market at fairly low rates, and they've been beneficiaries. So they may be getting hit a bit because of probably the reversal in the rate cycle is the broad sense I have.
Okay. Well, please stay with us, but let's go across to our research team and see what are the stocks that they are tracking, what are the interesting reports that they are reading. Darshan has already spoken about Natco Pharma, but next in line, let's see what are the other stocks. Shraddha, Somit and Nikki. Good morning. Well, Somit, I think oil companies will remain in focus after what government has done on excise duty. What are brokers really talking about?
So today the petrol and diesel prices were cut in the range of 2.3 to 2.6 per litre across India. Now this lowering of excise duty will lower government's revenue by around 13,000 crore. That is what 16 basis points of the GDP on an annualized basis. But this will have no impact on the oil marketing companies. Now lowering of excise duty will not lead to any material expansion of the marketing margins for oil marketing companies, says JP Morgan. Now however, this news will have some sentimental positive impact on the oil marketing companies, as it will give them some comfort that any further increase in crude oil prices will not be borne by these oil marketing companies. Now, in the last 1 month, HPCL, BPCL and Indian Oil fell down in the range of 5 to 10%, and JP Morgan believes that this news could lead to a reversal in this trend.
Okay. Other than oil marketing companies, Shraddha, what other stocks are you watching for?
Well, Apollo Tyres, where the company's QIP opened yesterday, they're looking to raise up to 1,500 crores. Now, this could be sizable for Apollo Tyres, given that its market cap stands at about 12,500 crores. We also have Hero Motor. That was, of course, the last company to report September auto sales numbers. Two things there. One, they reported unit sales of about 7.2 lakhs. That's slightly lower than the Bloomberg Index estimate of 7.4 lakh crores. Again, the September sales growth was about 7%, which is much lower than what its peers have done. Bajaj Auto reported a 14% growth, TVS Motors 23%, Eicher of course continues to outperform. So, as far as the two-wheeler space is concerned, these numbers don't seem very impressive. Nevertheless, it's a record sale number for Hero MotoCorp. Mahanagar Gas hiked CNG and PNG prices in Mumbai for about 4%. This is broadly in line with expectations, given that the government had hiked gas prices by about 17%. Ahluwalia contracts could also see some reaction on the back of 3 order wins totaling about 555 crores. We have Mahindra & Mahindra Financial, which has said that they will hold a board meeting on 6th October to consider long-term fundraising plans. Now, this is also a Bloomberg Quint story that we had broken back in early August, where he said that Mahindra & Mahindra Financial could raise up to 2,500 crores via QIP. So do keep an eye out on that name. And lastly, Hudson Agro Products, where SBI Mutual Fund bought 0.9% stake via bulk deal yesterday, Pradeep.
Okay, so these are the stocks. We'll take a view from our expert also, but Nikki has picked up an interesting mid-cap for us. Which
yes. So ICICI Direct has initiated a buy rating on Ratnamani Metals and Tubes. Now this company is a manufacturer of stainless steel tubes as well as pipes and carbon steel pipes. The end users of these products are industries like oil and gas, water, power and chemicals. Now the returns in terms of Ratnamani Metals and Tubes have fetched a return of nearly 28.5% YTD basis and around 55% on a yearly basis. Market capitalization is around 4,055 odd crore for this company. Now ICICI has initiated a buy rating with a potential upside of nearly 21% on this counter. It says that the company is perfectly placed to cater to the upcoming demand, and it says that the capex revival in the key industries is expected to bring in this demand for the company. It says that the stainless steel business is a quality business and a high margin business, while that of carbon steel business is a complementary business to the stainless steel. In terms of order book, it says that the strong multi-year order book of around 2,100 crore provides a strong visibility to the company.
Well, thanks Nikki, Somit and Shraddha for all the details. Let's go across to our expert and Girish. Actually, the oil stocks will remain in focus today after the steps government has taken. What's your view on oil PSUs?
Yeah, so on oil PSUs, the OMC specifically, we have a negative view. So we've had a great run on these stocks over the last 5 years, driven by deregulation in petrol product prices. GRMs have been fairly strong, and what has also happened is that there's been the companies have been beneficiaries of the capex done in the previous year. So they've the interest costs have come off, and other income has kind of been better. I think that cycle of good earnings growth is probably going to come to an end, because we believe that crude is going to trade in that 45 to 55 band, which would mean that GRMs are going to remain broadly flat over the next 2 to 3 year time frame. And we believe that the OMCs are on the verge of a fairly substantial capex cycle from here on. So we are not saying that the stocks are going to kind of crash or something like that. We are saying that the peak has been kind of hit. We don't see kind of material upside from here, because we think that earnings growth from here is going to be fairly minuscule, driven by flat GRMs, marketing margins which are not going to improve materially, higher depreciation and higher interest costs. So those are going to drive a fairly anemic kind of earnings growth for the sector. and therefore we've been like fairly cautious on the OMCs. These stocks have done very well in the last 5 years, but we think it's time to kind of move out of that and look at something more interesting.
Yeah, maybe look at suppliers to electric vehicles, for example. But hey, no, I mean, it's a long story, just kidding. But Girish, wanted to check with you about Natco. What did you make of this news? It's a positive. The question is, how big a positive to your mind?
Actually, my analyst is also trying to figure out how big a positive this is. We have an accumulate rating on Natco right now. So from whatever basic comments is made, it seems that the 20 mg opportunity is fairly sizable. The 40 mg opportunity, in my opinion, but the first one will have probably more players coming in and competing. The 40 mg opportunity is probably an opportunity which is at risk kind of an opportunity in the sense that they may probably launch, but there could be some litigation which may probably come up in later. So I'm not too sure whether they're going to go out there and launch that 40 mg opportunity. So from whatever I hear from my analyst, looks like a sizable opportunity. But you got to be careful about, it's a one-time thing that most of these companies, these are one-time molecules that come companies' way, and you shouldn't be applying a big multiple on it. So you should look at what is a steady state business, apply a multiple on that, and give, I would probably say a smaller multiple on some of these opportunities. So as things stand right now, I don't know what my analyst is going to say in terms of his final call on the stock post this thing. I don't think we were expecting it to happen so quickly.
Nobody was, yeah.
So obviously it's a positive. I think stock should move up. How much it's going to happen, how much the earnings impact is going to be, I don't have a word from my analyst as yet.
Fair call. But it's interesting, Pradeep. I mean, this was probably one stock which didn't correct as much as the others, the likes of Lupin or Sun. I think from the peak of 1,000, 1,050 to about 800 currently. So that's a 20% reaction. It probably corrected a bit more. But a spate of good news with the stock just down about 20%. It's been, you would argue, one of the more robust pharma names in the last 12 or 24 odd months.
So I think that faith the investors had is actually clearly justified by the kind of order flows coming in or the pipeline that's building. But let's go across to Vishwesh Chauhan, Head of Quantitative Research at Monarch Net Worth Capital. He is also joining in. And also Mukesh Singh, Head of Technical Analysis at Neela Financial Services. Vishwesh, first of all, Nifty is inching towards 9,900 once again. Last week we tried crossing 9,900. We kind of corrected 200 points intraday from that level, fell off the cliff. What is really your strategy around these levels? How will you play Nifty?
Morning, Pradeep. See, more or less we are believing that you are having a regime where the interest rate is likely to be very low, and you are talking about a scenario where the market doesn't have a much clue and not much market is expecting even from the RBI policy. So if you look at the implied volatility, that is not going anywhere. It should have risen by now if there would have been some event. So the way we are advising to our client, we are advising them to build a strategy which give them a theta. So we are shorting the options, and basically we are trying to remain that hedge via some sort of underlying. So at this moment, if I had to build some strategy on a Nifty, probably I would suggest that 98, 99 strangle should be short, and that will give you roughly a premium of around 190, 200 bucks, and one day theta is somewhere around 3.5 rupees. So my guess is that in this month, October tend to be an average positive negative of around 1%. So market should not go above 10,000. At the same time, downside looks protected till 9,500. So I would expect that this strangle of around 180, 190 should lose its premium to around 140, 100 rupees in next coming few days. So shorting an option is what we are advising to a client.
Eat the premium essentially is what Vishwesh Chauhan is recommending to their clients in a month of October, which may be slightly tight. Mukesh, very quickly, is there a bank Nifty strategy that you have, because that is underperforming?
Good morning, Neeraj. If you remember, around 9,700, we were advising clients to go long in Nifty. And now that it has inched towards 99, 10, 20, and with this being an obvious resistance area, as a majority of participants are feeling, it would be advisable to book some profits over here and wait for this particular RBI policy to be behind us, for rather thinking too much far ahead. As far as Bank Nifty is concerned, then I think one has to wait for this last couple of days range, which has evolved between 24,000 and 24,250, 300 kind of area. A breakout beyond this range would give a move of almost 300 to 350 odd points in a day or two. That's the best one can expect in Bank Nifty.
Okay, you also have a call on ACC. What's the trade?
Yeah, ACC has been on this particular stock after recording a high around 1870 has seen a sharp dip in last 10 days, and that rally along with the overall market when Nifty hit 9700 has been very feeble in its attempt. It has hardly moved from 1580 to 1660, 1665 kind of. It seems to be a bit weakish placed, and I would be rather giving a sell over here around 1650. Stop would be 1680, 81. Any move above that, one can look to exit from shorts. And on the downside, I am expecting a retest of around 1570, 1580 area once again.
Okay, Vishwesh, you are tracking India Cement. Is that also a short?
I think in a very shorter term we are looking at that it might go up, because you have to start looking at cement slightly from a 6 to 8 month point of view, while the likes of ECC and Ambuja has not done that bad. But if you see the relative performance of an India Cement, at least since April of this year, you would figure out that from the level of 230 stock came down to all the way 160, and in this period the stock had a not so deep correction relative to its rise from the last year Fab. So my guess is that probably that correction could have now completed, and it is the stock where I am very comfortable to form sort of a bullish strategy. So I think at a very plain, if I had to suggest someone, probably I would say that buy India Cement and stop loss could be kept around 170. You could expect a target of 200, 220 on this.
Okay, strong build up, good volumes, buy India Cements. Long Coal India as well, Vishwesh?
Yeah, definitely, Neeraj, because I have a very simple theory. We were able to backtest that when the interest rate was relatively low, which stocks tend to have done good, at least downside would have been capped. So we found that stock with a higher dividend yield, and that is a no-brainer for that matter, have tend to done good. And in that also, if we were able to establish a fact that which stock has corrected quite a large from a top, then probably Coal India comes to my mind, because it is having a dividend yield of around 7%. On top of it, I think somewhere we are not going to stop consuming the coal for that matter. So I think Coal India is definitely a buy, even from a 3 month, 6 month point of view, and somebody is willing to hold for a couple of years. I am seeing the stock to double also. But from a trading perspective, I would expect that stock can go higher from the current level. So recommending buy for the target of 320 with a stop loss below 250.
And Mukesh, your call on Bharti Infra, tell Mukesh.
Yeah, Bharti Infra seems to be showing some kind of leadership quality as far as trends of last few days in the overall market is concerned. It seems to have formed a classical inverted head and shoulder in the vicinity of 200 days exponential moving average. And what more, the neckline of that particular pattern stands broken above in yesterday's session. That neckline runs through 404, 405. Stock closed yesterday at around 408. Any dips around 404 can be used to buy in this particular stock. I would place a stop below 397 for a possible move towards 422 to 425.
Okay, so that's your call on Bharti Infratel. Moving on to Bloomberg Edge, Havells India is under pressure. This stock is down 6% from lifetime high. Jayesh Khilnani has an interesting chart from Bloomberg. Jayesh, what are the charts indicating?
Morning, Pradeep. So the chart is indicating that the pressure that Havells India was under, that is about to reverse as per the stochastic indicator. Now, the theory behind the stochastic indicator is that it gives you an indication when the price move is overextended. So we saw Havells India correct from about 520 odd levels to sub 500 levels, and that is where the pressure was built up. It also helps you to measure where the current price is in with relation to the recent high or the low. In doing that, now you know how to interpret the stochastic. You have to watch out for a few conditions. Anything which is above 80 is overbought, and anything that is below 20 is oversold. And a crossover between the two lines that you will see on your screen will indicate a buy or a sell signal depending on the direction of the crossover. So going back to the chart of Havells India, that is where the stock had come under pressure. You can see in the month of September from 520 odd levels to below 500, and as of yesterday what has happened is that the blue line has crossed over the white line, which indicates that there has been a buy signal generated on the stochastic indicator, thereby suggesting that the pressure that the stock was under, that is likely to reverse, and the stock will be headed higher from current levels.
Have you back tested the indicator for Havells?
Yes, Pradeep, I have, and it's almost 100% hit rate that stochastic has on Havells India. So if you look at the last 1 year, there were about 13 trades that were generated as per the stochastic, both on the long and the short side, out of which 9 of them resulted in positive gains for Havells India, and only 2 of them were loss-making trades. With the total return that Havells India had generated was about 99% on the stock.
Seems to be a no-brainer of sorts. Jayesh, thanks a lot. Well, if charts and indicators were to be believed all the time, I don't know whether they make money or no, but seems like this indicator works beautifully for Havells. Fundamentally, Havells or consumer electricals, Girish, very quickly?
Yeah, consumer electricals, consumer appliances is a space we like. I mean, consumption as a space is something which is positively inclined to, be it financials, be it anything else. Except the valuation bit, which is the most difficult thing to call. So there we kind of like Whirlpool and Crompton Consumer. We do track Havells, we do track some of the others, but I think the valuations are fairly rich out there. Whirlpool, because we think that the areas that it's present in refrigerators and also washing machines, it's a far more concentrated market out there. Top 3-4 players have a fairly large share of the market, whereas in ACs, I would think that the market is kind of very fragmented. Making money is going to be far more difficult out there. I think the key thing driving it is electrification, the fact that affordable housing is kind of picking up, the fact that penetration levels are fairly low. ACs, the penetration levels is 5-6% of the market. You have washing machines at something like 10-11% of the market. Refrigerators are some 20% of the market. So when you see color televisions, they're at some 55% of the market. So there's a long way to go for these kind of companies from a penetration standpoint. And as Indians become richer over the many years going forward, and you have housing coming up in a fairly substantial way in the next 10 years, I would probably think that these stocks are going to be fairly strong beneficiaries.
Okay. So not Havells fundamentally, but the stochastic indicator indicates that Havells could be a great short-term trade. So do watch out for that. We'll talk to our chartist a bit about Havells, but very close to the pre-open rates. Before we hit those pre-open rates, there is a new kid on the block. Godrej Industries is looking to raise 300 crores from this new kid, which is Godrej Agrovet. The IPO opens today. The country's largest animal feed maker has got a thumbs up from 6 brokerage houses, which will see Temasek selling 1/3 of its stake in the company. Sumit is here to tell us why the brokerages have a subscribe call. Sumit, good morning.
Good morning, Neeraj. Now, so Godrej Agrovet will be looking to raise as much as 1,157 crore rupees at a price band of 450 to 460. Now, the issue is a combination of an offer for sale and a fresh issue. Now, Godrej Industries and Temasek-owned V Sciences will be participating in the offer for sale. Now, the company will be raising around 292 crore from fresh issue, and 250 crore of that will be used to repay short-term debt, while the remaining for general corporate purpose. Now, Godrej Agrovet is a diversified research and development-based companies operating in 5 business verticals, that is animal feed, crop protection, oil palm, dairy, and there's one more business, poultry. Now in the last 3 years, that is from FY15 to first quarter of financial year 2018, the revenue contribution of animal feed has fallen from 78% to 47%. Now the reason behind this is crop protection business of the company, which has seen its revenue contribution double, which has seen its revenue contribution double in the last 3 years, has a high margin business. Now the EBIT margin of revenue of crop protection is 25%, while that of animal feed is 6%. And that is the quite obvious reason why the company is shifting its focus from animal feed to crop protection. Now it has business operations in 5 different businesses, that is animal feed, crop protection, dairy, oil palm, and poultry. Now the animal feed business, it is the largest animal feed producer producer in India with a production capacity of 2.36 million metric tons per annum, and it has around 4,000 distributors selling its products across India. Now, the crop protection business, in the crop protection business, it has 2 manufacturing facilities and 2 R&D facilities, along with 6,000 distributors on its payroll. Coming to the oil palm business, now it is the largest oil palm producer in India, and it has around 5 oil palm mills across India. Now, the dairy business of Godrej Industries is saturated in South India. It has 9 processing units in South India, and the daily procurement is close to 0.63 million liters. The poultry business, now the Godrej Agrovet entered poultry business through a joint venture with US-based Tyson Foods. Now the poultry business in India is significantly underpenetrated and is expected to grow at a compounded annual growth rate of 20% over FY17 to FY20. Now coming to the financials of the company, the revenue and the net profit of the company grew at a compounded annual growth rate of 16% and 27% over FY13 to FY17. The debt to equity stands at 0.9 times, which will be further which will further go down to 0.7 times post IPO. Now, the company's return on capital employed stands at 24.2%.
Right.
Finally, coming on the valuations, at the upper end of the price band, that is 460, the price to earnings stands at 30.4 times. While the market cap to
Sumit, you'll have to hang on there because the pre-open rates are out. Let's just talk about the pre-open rates and show you what the index is doing this morning. About 0.5% for the Nifty 50, about 0.2% for the Sensex. So muted start on expected lines, I think, is what the indices were anyways indicating towards. Let's bring up some of the usual suspects in the session today. So you would watch out for the auto names, the likes of Hero MotoCorp and a few others. Those could be interesting ones. Natco Pharma, the big boost. It may not have a 20% up move, but likely to have some up move in the session today for sure. We'll get to know at the end of the pre-open rates at 9:08. So that is interesting. Watch out for Bharat Forge. That should have an interesting move as well in the session today. Yet another month of the Class 8 truck sales showing some upticks. Remember, but Bharat Forge has had an uptick in trade yesterday. So let's wait and watch if that continues or not. And then a few others, the likes of Hatson and Havells, from amongst the mid-cap names. The large caps, Pradeep, I suspect the OMCs and autos will be in focus.
Definitely. Look at Apollo Tyres. The company is going to raise funds, and also Mahanagar Gas. They have hiked prices of CNG and PNG in Mumbai by nearly 4%. So what happened to Mahanagar Gas? No tick so far. That's surprising. We'll wait for some volume to build up at that counter maybe. Info Edge India would also be in focus because Zomato has waived the reservation fees. Also, Cyient has entered into an agreement. Ahluwalia contract received a contract for 555 crore rupees. That is quite significant. The stock is up around 12% as we can see. Also, Grief's Cotton got into an agreement that would probably boost the top line going forward. So that's yet another stock is gaining 4% in today's trade. So these are some of the stocks. And when we are talking about Godrej Agrovet IPO, Godrej Industries should also be in focus, I believe. How is that one doing? Well, 590 flat opening for the day.
Well, CLSA has upgraded its rating on ITC. It's 902. So let's get in the brokerage call for the day and show you what CLSA has to say about ITC. And Nomura, of course, has maintained the reduced rating on Adani Ports but increased the target price. Agam is here to shed some light on the rationale.
Well, thanks, Neeraj. Starting off with CLSA on ITC, as you've already mentioned, they have upgraded the stock to buy from underperform, and they've also increased the price target to 310 from 285. The key rationale here is that given the recent correction that ITC has seen, it offers an opportunity to move in and seize substantial upside. Now, they do expect around 2.5% volumes drop in FY18, but that to a certain extent has been factored in. And the cigarette EBIT growth is expected to move up as much as 6.5%. Moreover, valuations are at a slight discount to its 5-year average, according to CLSA. Moving on to Nomura, Adani Ports and SEZ, they maintain their reduced stance, but they have hiked the price target to 319 from 234. And once again, they say that they do see a rise in earnings estimates by as much as 11 to 13% between FY18, FY19. And Mudra volumes are expected to see growth on the back of 15% CAGR in containers over FY17 through 20. Finally, they are expecting poor free cash flow generation in the near term. But when it comes to net profits as well as revenues, they're expecting about 3% CAGR over FY17, FY20, and that's the reason why we are looking at an increase in price target as far as Adani Ports goes.
Okay. Thanks, Agam, for all the details. So these are the stocks really to watch out for. But let's also have a look at rupee that has opened firm as per our expectation after hitting 65.50 in yesterday's trade. This morning, the quotes are 65.34. That's a gain of around 15-16 paise. I think the credit goes more to the other currencies like yen and euro that have appreciated against dollars. Rupee is also appreciating, going with that trend, I would believe.
Well, it's nervous, jittery moments for the MPC today. I must tell you, with the rupee doing what it is doing, yes, but also with what the small hit to the fisc of 13,000 crores because of the excise duty cut. So, not the envious position to be in.
Correct, but if you look at the PMI data that came out yesterday, it was clearly indicating that most of the manufacturing companies are losing their market share in exports. That was because of the strong rupee. So I think this would rather be a relief for growth. So it's an automatic stimulus for the economy, so to say.
Yeah, but let's wait and watch. I think it's just too early and too difficult to call what the currency will do unless there is some intervention, quite frankly. But yeah, let's wait and watch. For now, 65.35, almost everybody in the camp that the rupee at 63 was overvalued and some correction was par for the course. Having said that, Girish, while we talk about the manufacturers not being able to, losing ground by virtue of what's happening to the currency, other exporters, IT for example, has just not been able to gain any kind of ground. You are one of the earliest bears, if I can use that term, or the cautionary tones on IT. Is your stance changing, or are you continue to be bearish?
We continue to be bearish on IT. Yes, we put out that call about 2.5 years back, and it's kind of played out fairly well. From a cyclical standpoint, I think global growth looks better than what we were anticipating at the beginning of the year, except for, say, the US or for India. US especially, I think growth expectations were somewhere in the region of 2.5% when the year started, especially with a lot of hope connected with what Trump would do on taxes or healthcare and stuff like that, which has not really played out. So from that standpoint, I would say that growth expectations on the US have come off from about 2.5% to maybe 2.2%. But otherwise, if you look at the other parts of the globe, global growth has picked up. But that is not reflected in the kind of growth that the IT services firms are seeing right now, because structurally, I think they are on a weak wicket. The area of IT services which is growing is the digital side, where we believe that Indian IT services firms are losing market share because they have not invested enough beforehand to build capabilities on the digital side, and they're losing market share to players like Accenture and Cognizant, which is I mean, I'm not saying that those companies are going to grow fairly rapidly. I think Cognizant will probably do 8 to 12% kind of growth, but I believe that the Indian companies, the tier 1 Indian companies, are stuck in the mid-single digit dollar revenue growth kind of a number in the next 2 to 3 years. So and with the kind of little bit of margin pressure and rupee appreciation, depreciation, whatever be the number you take, earnings growth CAGR over the next few years is going to be like flattish to maybe even a little negative, is basically the call we have on the sector. So we're not excited. The only thing that one can do with it is to do a trade, in the sense that it's looking cheap vis-a-vis some of the more expensive parts of the market, and you can do a trade there. You can buy it.
And is that the case right now?
See, it's very difficult call for me to take whether it's the right point to get in and what point one should get off. It's a very
you don't like anything at all in IT?
No, we do not like anything at all right now, because we think that the industry is going through a transition which is very fundamental, and over the next 3 to 4 year time frame, we will know who the winners, so to speak, are within the Indian pack. At this point in time, it's very difficult to call who these would be. As things stand right now, on the digital side, all I can say is that maybe an Accenture and possibly a Cognizant will make the cut. Very difficult for me to say which ones among the Indian pack will make the cut in the next 3 to 4 year time frame.
Okay, I just want to mark a few stocks, Pradeep, if I may. I think the OMCs should come up on the screen. Fairly interesting as to what's happening there. BPHP, IOC should be there. About a 3% gain a piece for each of these as the pre-open rates start to settle in. And just want to mark Natco Pharma and see if that is indeed reacting in a big way to the Copaxone approval. 18% for Natco. That's a really, really big move. For viewers who are tuning in right now, remember, Mylan has got the approval for 20 mg and 40 mg tablets for Copaxone, and that should lead to Natco, which is a partner of Mylan, do very well in the session today. So watch out for this one, 18%. I know, Girish, we spoke about this, that it's difficult. Your analyst hasn't quite given you the call. We expected a pop to come, but I did hear you mention that don't aside multiples to one-off events. Would you be happy with this 18% move for the sake of your clients who would have bought into Natco, or would you believe this is too much?
Very difficult for me to comment on this particular opportunity and how big an upside that's going to lead to. I don't have numbers to really talk about. I mean, it's best left to the analysts to give a call on this. But broadly, we are positive on pharma. That's probably the contrarian call of the house, so to speak. With among the large sectors, IT and pharma have kind of under performed in the last few years. I think pharma has seen both a PE multiple cut and an earnings cut. We think that over the next 2 to 3 year time frame, we're not saying it's going to happen immediately, but over the next 2 to 3 year time frame, we think both can probably reverse. So we should get fairly strong returns from the pharma pack, provided you have a strong stomach. There's going to be a bit of volatility in the stocks in the next 12 months or maybe even 24 months. But I think if you look beyond that, I think pharma is a space to get into. You need to have some patience and you need to be able to withstand some volatility in the interim. But I think the opportunity is there. I think the biggest one is that in the US, my analyst tells me that there are 2,200 odd generic products out there, of which the competitive intensity of 50% of them are less than 3 players. So there is a large opportunity. And the molecules where Indian players are playing in have like 7, 8, 10, 11 players. So the price compression we're seeing is because Indians are playing in the more competitive parts of the market. But if they start looking at the less competitive parts of the market, more complex generics, injectables and stuff like that, that's where I think more money can be made. So that's what we think will probably transpire over the next 2 to 3 year time frame.
Okay. Let's look at some of the mid-cap stocks. Ahluwalia contract, after that 555 crore rupees order, has gained 6%. SJVN is trading at 35. There is a gain of roughly 5% to SJVN. Mukesh, technically, if you look at SJVN, this relatively a quiet stock, but today it has moved up on the news report that cabinet will probably give it 2,000 crore or so to complete a project that has been work in progress for a long time now. What's your call on SJVN? Is there a trade really?
Pradeep, this particular stock since February has been moving in a kind of a falling channel, and it's a pretty broad falling channel, and the resistance line of that particular channel runs through around 34.50-35, and if the stock is able to just pop into that kind of resistance area and then starts breaking morning lows, then I think one should be booking profits in this particular stock, if at all, if one is holding around, if one would have bought around 30-31. The other part of the story is if it manages to move above 35 and if morning hour highs are getting crossed again, then the long-awaited breakout in this particular trade can happen, and in that case, it can the stock can rally towards 41-42.
Okay. Stay on, gentlemen. Lots more to talk about. The indices are looking like starting off on a flattish note. Let's tell you all that you need to know to stay ahead in trade today. RBI will announce the monetary policy at 2:30 p.m. today. Banks, especially PSU banks and debt-laden sectors and stocks, will be in focus.
Hero Motor is the last company to report September auto sales numbers. The two-wheeler major sells 7.2 lakh units, but falls short of Bloomberg Quint estimates of 7.4 lakh.
Bharat Forge and RK Forging in focus as North America Class 8 truck sales rise for the 4th straight month. September sales up 60% over last year and 7% over the last quarter.
ITC in focus as CLSA upgrades the stock to buy from underperform and raises target to 310 from 285 as it finds risk reward favorable.
Godrej Agrovet IPO opens today. Issue price at 450 to 460. The company allots 7.42 million shares to anchor investors.
Hindustan Zinc, Dena Bank, Eicher Motors, Bodil Chemical, Deepak Fertilizers and Sanghi Industries will be meeting investors today. So these stocks will also remain in focus.
And the one that will remain in focus in a big way would be Natco Pharma, up 18% in the pre-open session. Lots more to talk about. But before we move further, let's get in the top trading idea from both our experts today. Vishwesh, if you were to bet on one stock, very quickly, 30 seconds, which one would that be?
I think Voltas, I think in a very, very short term, if somebody is looking to trade on a long side, and this market is definitely a trading market right now. So I think with a stop below 510, one could buy Voltas for target 560, 540.
Okay, buy Voltas with the target of 540. If I'm not wrong, that's what Vishwesh recommended. Mukesh, your top call for this morning.
I think I will stick with Bharti Infra, buy around 404, 405 for a possible move towards 422. Stop would be 397.
Okay, Bharti Infratel from Mukesh's end and Voltas from Vishwesh's end. Those are the two stocks that people should be watching out for in the session today. I dare say a bunch of other stocks like,
companies.
Well, oil companies, yes, 3% higher piece. Actually, Girish, a quick view here. You mentioned you're bearish. 20 seconds. OMCs, there's a 3% rise today. You lose this rise to lighten up your positions?
I think probably market is feeling relieved that it's not taken the hit in one sense. So I mean the kind of rumor going around in the market was that the hit would be taken by the OMCs and not the government per se. So the fact that the fact that the government has taken the hit is probably a relief right now. But it's a short-term relief. I don't think it's going to be sustainable over the medium term.
That's true. So there was some confusion, that 2 rupees has come from government, maybe some paisa, 25 to 50 paisa has come from a OMC, but that is not, as companies have clarified, Neeraj, that it's actually the VAT which proportionately gets reduced, so the net impact is much higher.
It's good to get that clarification. There's a lot of doubts about what came on the side and what was actually done. But here's the market open. On this Wednesday morning, the Nifty 21 points higher, the Sensex about 25 odd points, so flat as flat can be. Same for the Nifty Bank, which is extremely flat in the session today. I don't think the broader markets will be doing too different. So, yep, about 0.5% for the Nifty mid cap and the BSE small cap about 0.25%. Let's bring up the heat map. Though I really want to look at Natco first, but let's give due credence to the index. And OMCs are at top of the pile. HPCL, IOC, BPCL, the top 3 gainers today. Not too many losers. I think that's the key thing. There are not too many losers that we have in the session, except for Coal India, which is down about 1%. But OMC is ruling the roost. ITC marginally higher. There is a CLSA note out there too. And yes, Bank marginally higher. Let's pull up a couple of stocks out here. The OMCs, individually, all 3 of them should come up on the screen. Good going there. BPHP, IOC and ITC predominantly because it's a heavyweight and should be the biggest contributor on the index right now, up about 1%. So it's a good start on a day when the other key indices are trading very, very flat. What about individual names? I think 4 or 5 names stand out, quite frankly, in the session today. There would be the Bharat Forges. Yes, that's starting off about 2.5% higher. So the truck sales very, very strong. North America Class 8 truck sales very strong, and that's showing in Bharat Forge. So after a 4.5% up move yesterday, another 2% in the session today. 20% for Natco Pharma. That's a big, big move for this one. 952 and counting. So good going there for Natco. In the session, a couple of other stocks will come up on your screen. Motor Corp slightly short of Bloomberg Quint estimates, but the highest ever monthly sales. So good going for Motor Corp. Let's bring up Hatsun Agro. Well, SBI MF has met and picked up some stake in Hatsun Agro, and that stock is up about 2.5%. Last but not the least, I want to show what the Bloomberg terminal was indicating with regards to Havells. The stochastic indicators are indicating a buy. There's a small downtrend there. If you believe in those indicators, maybe it might be worth buying Havells.
Ramakrishna Forging is a stock to watch out for, up around 1.5%. Also, if you look at the usual suspects, Ahluwalia, we talked about it. SJVN, we did talk about it. But also, you look at GNFC, which is moving up in today's trade, up by around 3.5%. And logistics is a segment which is doing quite well in early trades, gaining to 2.5%. You look at Gati, you look at Snowman. Both these stocks are firm this morning. You also have NHPC moving along with SJVN. Looks like it often erupts off on the peers. So NHPC is again a PSU, is into the same business, that is hydropower. So that is quite obvious. Inox Wind is also up around 2% with good volumes, so to say. So these are some of the stock, but if you look at the large caps, there is a lot of volume at OMC counters this morning.
Yeah, not surprised there at all. Just want to mark one stock, Indian Hotels, which is down as well, about 7% in trade. But before we thank our guests, Vishwesh, one quick thought from you. We can't really trade Natco, so leave that out. Anything else that stands out for you?
I think in the similar space, probably you should start considering some of these pharma stocks like Glenmark Pharma. And I am a more of an option trader, so I would suggest that in the current series, the way we were suggesting our client to build a strategy is that buy 600 rupees call option 1 lot, and in contrast to that, sell 3 lot of 660. So it will be a net credit strategy. You will have a downside which will be limited. At the same time, we are expecting a 7-8% upside in the current series. So until 660, you could make a decent money in the stock. So that is the one strategy which is called a ratio spread or Glenmark Pharma.
Girish, before we let you go, today is credit policy, so all eyes on financials. Any particular pocket in this sector that you really like, because it's quite a diverse pack actually?
Right. So we like the consumer financials, be it the banks or be it the NBFCs. Obviously, the issues of valuations. So one space we kind of we've liked for a while is gold finance players, Muthoot and Manappuram. I think these are trading at fairly interesting multiples. FI19, I think they're trading at 2.4 or 2.5 times price to adjusted book. Yes, they're not going to grow at the 20, 30, 40% rate that some of the other players are growing at, but still a 10 to 15% kind of rate of growth for these companies are possible in the next couple of years. And the interesting part is that they have collateral which is fairly good. I think the business dynamics from that perspective is fairly supportive in one sense. So where there are issues of SME related asset quality and the fact that the other consumer AUM has been growing at a very fast pace, which could potentially lead to problems down the road in terms of asset quality. Here are two players where there's a fairly strong collateral which could kind of buttress asset quality in one sense. So I think that's an area to look at. I think it's coming at fairly interesting multiples right now. Yes, you'll not see blockbuster growth rates here, but I think it's more of a defensive bet, so to speak, in the kind of environment we are kind of looking at.
It's interesting. Okay. Interesting names to have as defensives, I must say. But Girish, thanks so much. Really appreciate you taking the time out and joining us today and giving us your thoughts. Mukesh and Vishwesh, thanks so much for joining in today with your technical recommendations as well. It's 9:20. The markets flattish, more action in the oil marketing companies. Must say the stock of the day, however, as we've been speaking about all morning, is Natco Pharma. That is the big mover in the session today. But lots more beyond what's happening in the day today. Let's talk about all of that and more. What could happen over the next few months, few quarters, few years. Madhav Dhar, managing partner at GTI Capital, joins us right now on the show. Mr. Dhar, good morning and thanks for joining us on Bloomberg Quint. This is Neeraj here. You could take your pick. There's just so many things to choose to talk about. What the government did yesterday, bite the bullet to populism, so to say, cut the excise rate. Public will cheer, but it puts a stress on the finances, or the monetary policy today, and maybe both of those are linked too.
Yeah, I mean, there is a lot to talk about, and unfortunately, some of the macro momentum in the economy that you think we would have by now, we are not seeing. And, and that is worrisome because the markets are elevated. You could argue that the valuations are not challenging if you assume that we are at a low level of profitability and both the economy and particularly profits would rebound strongly. I think that would have been a reasonable assumption up until 6 months ago, but it seems that the preconditions for that are not quite there. So I think you may end up in a bit of an air pocket where valuations are extended and the profit momentum is not coming through. So I think that is worrying. It seems that, at least to me, I mean, just to step back, you can't really get an economic cycle going without getting a private sector credit cycle going. You can't get a private sector credit cycle going without dealing head on with the bad loan situation. So till that is cleared, you are going to have ad hoc measures, whether it's cutting excise or whether it's government spending or some consumption stop and so on. And that will patch up your GDP, that will patch up some kind of growth. But you won't get a full-on cycle that is needed and frankly is relatively easy to engineer in a country like India. So that is disappointing. So from a market standpoint, honestly, I feel very mixed. I don't feel bearish because I think, the upside, we are still halfway through a full-on bull market. But I think we may pause here as greater evidence of profit and economic momentum comes up, which is not there at this point. So that's worrisome.
Good morning, Mr. Dhar. This is Pradeep Pandya. You are talking about a slowdown, and we have been receiving various commentaries on that line. But if you look at some of the data that has come in over the last 2-3 days, we have seen extraordinary growth in auto stocks. Several auto companies have managed to kind of move up in double digits, so 20 to 25% growth in two-wheeler and four-wheeler or commercial vehicle sales. That is one. You also look at the manufacturing PMI, which is expanding for second month in a row. We got a core sector data that involves some 6 to 8 core industries, which is up by around 5%. Yeah. So how do you really look at the overall scenario? And isn't it too early to talk about a stimulus?
No, I don't think you need a stimulus. You just need a sensible strategic policy. I mean, the government's job is not to create either jobs or growth. The government's job is to create the preconditions for employment and for growth. So, I mean, I'm looking for action from the government that lubricates growth where they can, and all. I mean, by the way, I agree with all the points you're making. So I don't agree with the bearish view either, that India is just falling off a cliff, and there is the picture is much more mixed. I think, frankly, the evidence is that relatively shortly you will get some kind of cycle going. Just the valuations are extended. That's about it. So it's a very mixed picture. There are certain sectors that are rebounding very strongly from a decline from 2 years ago, as you point out, and those numbers are very solid. Even the forecast, even after being lowered, is up to 6.5 or 7%. It should be 8 or 9, but nothing wrong with 6.5 or 7, especially if it's accelerating. So lots of things are going on. I mean, this insolvency and bankruptcy court, I mean, at least all my lawyer friends tell me that is extremely well thought through, extremely well being implemented in a very, very constructive way. And that will go a long way. And I think, so that's what I mean, that you need to get the preconditions. For the first time, we are even using the word like privatization as opposed to this very Indian word of disinvestment. Hasn't happened yet, but at least the conversation is shifting. Conversation is shifting about bad loans, is shifting about privatization. So that is encouraging. And there's a very vibrant private sector. So many areas, as you point out, are rebounding. So the picture is definitely mixed. I mean, that's my original point. I feel neither clearly bullish, because to support this kind of valuations, you need clear profit momentum. And that's not quite there. But you don't want to be out of a market that is going to grow somewhere between 6 and 9% over the next 5 or 6 years, where you are at the low point of the profit cycle, even valuations seem extended. So this is one of those times in a market and economic cycle that is a little unclear. And my experience when things are unclear is to stay involved and stay invested and not get to the sidelines. So I'm in a very, I was just mentioning to the other, I feel neither bullish nor bearish. I feel sort of sheepish. So I'm just hanging in there and seeing evidence for acceleration. And my sense is you'll get it. But it's unfortunate that, Indian policy needs to get pushed to the wall for something good to come out of it.
So let's see what government really does. But any stories that you like, anything that you would like to pick up in the current market, or maybe if there is a correction?
No, listen, I tend to invest in a very macro basis, and even when I'm picking stocks, I'd rather not talk about that. So in that sense, I'm sorry, I'm going to be very boring for your investors. And I think there are many trends. I still think a very boring area. I think Indian infrastructure will absolutely boom. So I think there will be lots of stocks and companies around that service Indian infrastructure. So I don't necessarily mean the big players that get infrastructure contracts, but the supply chain of fulfilling the infrastructure is a big area to investigate. I think it's off the radar, it's boring, there are lots of interesting companies. My theory is that that's where massive amounts of government and eventually private investing will come, starting very soon. And roads is already happening. And that's a multi-year, big-time trend. So that's one area of interest. I think defense in a similar way is another area of interest. I think financials is very complicated. I've always liked them. I think the private sector stuff is extremely overvalued. Some of the most exciting things are happening off market in unlisted stuff. So it's a little complicated as you get down to that level.
Yeah, but Mr. Dhar, I have one final question really. A bunch of government initiatives which have started when the government came into power in 2014 or over the last 3 years at various points of time haven't seen any kind of pickup, be it local defense manufacturing has happened in a very sporadic way. This whole clean Ganga and dredging, so on and so forth, has not happened. Railways, for all that we spoke about, really hasn't set the order books of any of the domestic players on fire. Any of these pockets that might make a meaningful comeback, your conversations with policymakers or companies suggesting that?
Honestly, I am extremely disappointed. And these things are very tough. These are very slow moving, very political, very policy oriented things. But so I didn't have high immediate expectations, but even my sort of medium level expectations have been disappointing. I think some of the recent cabinet changes seem to indicate that is of greater concern. And so perhaps the cabinet reshuffle is indicative that this area will get a bigger and faster and more immediate priority. I mean, one area certainly, I think road construction is one area that is been growing strongly despite disappointing in other areas. So no, I don't have any deep insight. My reading of the tea leaves is that it's definitely of bigger concern. I think government is realizing it's something it has to do. It also realizing that's the highest delta on employment generation is things like housing construction and road transport, ports, airports, and so on. So not only is that exactly what India needs, it's also exactly what the politicians need. So hopefully it will come together in the next several months. So let's see how that goes.
Okay, let's see how that goes. But it was a pleasure chatting with you today, Mr. Dhar. I look forward to have you more often on this forum. Thanks for taking the time out.
Thanks.
That's Madhav Dhar of GTI Capital. Must say, that leaves a lot of people in the same boat, disappointed with how things have shaped up in the last 3 years on a lot of policy-related stocks. What is happening today in the markets, though, just a quick check before we take this break. The indices lying flat, as flat can be. The Nifty Bank too, marginally in the red, but flat. Natco Pharma is the stock of the day, and a bunch of other mid-caps stay in focus, but I think Pradeep was right. On the index, all action on the OMCs, BPHP, ROC, right up there in the spotlight. But for now, take a break. We put the spotlight back on autos on the other side of the break. What's driving the stellar tractor sales? Rajesh Jejurikar of Mahindra & Mahindra comes in to talk about that. A bit later on, Kevin Disa of Bajaj Auto to talk about whether the revival in the festive season is sustainable.
Hi, welcome back. You're watching Indian Open. September was a blowout month for tractor sales at Mahindra & Mahindra. The company sold the most tractors in a month ever. The early onset of the festival season is partly responsible, but to get a better read of rural demand, we're joined by Rajesh Jejurikar. He's the president of farm equipment sector at Mahindra & Mahindra. Rajesh, good morning. It's turned out to be a stellar month for you. Break it down for us in terms of what you attribute to festival sales and how you would read the return of demand in the rural sector, if at all it is a return.
So firstly, Menka, nice to be with you on this channel, the first time for me.
Yes, thank you so much for that.
Pleasure to be with all of you. New platform leading to a channel, I guess, right?
Absolutely.
So it has been a very good month for us, and we've sold 44,000 tractors in the farm equipment sector, and that's growth of 52%, like you said. So it has been a good performance. We have gained market share, not just in September, but consistently through first half of this year, as well as on the back of the last 2 years, where we gained 2.7% market share points in the previous 2 years. So it's a good industry performance and of course a good brand performance as well. So what are the drivers is your question. So the two parts to it. One is the preponement partly of the season, like you said. So September this year there has been Navratra and Dasera, whereas last year it was all in October. So certainly that's one of the factors that accounts for a high percentage growth because the base is different. But we much like many people talk about the gloom around everywhere in rural India, we don't necessarily see that. Our view is that many factors in rural India are positive. There have been just anecdotally 2 or 3 states where there has been rainfall deficit. UP and MP are 2 big ones, but these are the ones also where reservoir levels are at a good level. They are also the ones which have very high level of irrigation, and hence the impact on crop and farming is not as much as people would have expected it to be. And many other places where reservoir levels have been low or irrigation has not been as good, rains have been good, So the country is kind of had a nice balancing this time, because sometimes we just read rainfall data and then interpret that to mean that there's there's going to be panic. So one has to look at it at a more micro level and connect all the factors, which is rainfall, reservoirs and irrigation coverage. And I think that kind of makes us feel that the situation will be decent. Kharif production has been at a decent level. MSPs are up 6%. So overall we feel that rural demand is reasonably robust. I think you see that in some other sectors as well.
Okay, fair enough. Before we drill down a little bit more into your reading of rural demand, I'm just trying to get a better breakup of the numbers. So in October last year, which is 2016, you sold, if I remember correctly, in the domestic market, about 43,826 units. Now, October was the month last year in which you had Navratri Dashera and the beginning of Diwali and the week of Diwali, though a bulk of it was also in November. From that point of view, would you say that the big bump up, or most of the bump up that you're seeing in that 50% additional sales in the domestic market, is simply on account of festival season and maybe restocking because of all the destocking that had taken place prior to GST?
You're right on last year's October number. That was our previous highest. And if you compare our previous highest in October, which was October last year, that was a month in which all the festival happened at the same time, by and large, right? And this year you just have had the Navratri, Dasera with a lot of, Dhanteras, Diwali, all of that still to come by. So I think in that context, 44,000 compared to the October last year number is even if you compare October last year to September this year, that's a good number. Is there stock build back in happening because of GST? I guess some of it, yes, but that happened in August as well. So if you really look at April to September, which kind of evens out the build-ups and corrections both, then the industry and we grew by about 21% we gained some market share. Industry grew about around 20%. So that kind of if you look at 6 months, then that sorts out the GST downstocking that may have happened in June.
Good morning, Mr. Jujurika. This is Ira joining in as well. I'm sorry, I have one more macro question before we get into more company-specific conversations. One of the things that was being talked about was, apart from the rainfall issue, this whole farm sector stress. Some people had premised on the fact that wages have been going up, but incomes or remuneration from farming had actually come down. So there was stress on the landed farmer segment. That was a theory that was being thrown out here in Mumbai. I'm just wondering whether on the ground you have seen anything which is not only linked to the rainfall of the season, but over a 2-year period. Is there anything to suggest that in the landed farming community there's a little bit less in terms of income in hand to then spend on mechanization, etc.?
No, actually not, because inflation levels in rural India have dropped as well. So, net money in hand seems to be okay. I think the other thing one has to consider is a lot of rural India is now moving towards non-farm income as well. So when you look at incomes in the hands of farmers, it's not just what comes out of agriculture, but a lot of it comes out of other allied activities and services. So one has to look at it holistically, and we find that other revenues and income streams are increasingly going up. The one thing that we don't often look at in data is a lot of farmers or farmland owners now live in semi-urban areas in actually doing jobs. So it's not as discrete as one used to see in the past, where somebody is a landowner and a farmer and has no other life. We find a lot of consumers are now in semi-urban areas. They may be doing other jobs, they may be teachers working in government organizations, and they have farmland. So their income streams are not necessarily only farming dependent. It's a kind of hybrid model that's emerging.
Rajesh, would you say that the farm loan waivers that we've seen certain state governments give out may have also aided or helped keep rural demand buoyant and contributed to, let's say, some of the boost in sales for companies like yours?
No, actually the effect of that has not yet come in, because that's by and large just been announced, but it's not really executed yet on ground, and that will probably happen over the next few months. So
yeah, actually that's true, because I think some of the visuals we've seen are checks of 1 rupee and 5 rupees and things like that. So you're saying that will probably kick in the next few months,
yeah,
right?
So it's not, that's not a factor yet.
But it will become a factor?
Correct,
you expect it to become a factor?
That's not yet in.
You expect it to become a factor and continue to keep
the way we see it is the reason it becomes a factor is because finance companies / banks recapitalize themselves, and that helps them improve lending. So that's really what becomes the demand enabler, more than some other factors that we talk about by way of farmer income. It doesn't affect farmer income as much as ability of banks to lend.
A follow-up to that, Rajesh, good morning. Neeraj joining in the discussion as well. 2 or 3 state elections coming up. Does that, historically, is there evidence that would lead to increased agri spending and therefore enhancement of tractor sales?
So the question is best answered historically, because historically, yes, what tends to happen is when there are state elections, the MSP start going up and agri spending goes up too. So that definitely is an enabler to demand and money in hands of farmers. Okay. So historically, yes, how much of that will happen as we come into this year's election, one can't speculate on, but historically you are absolutely right. It is definitely a demand enabler.
Okay. The other thing is, there are 2 camps right now within auto sales. One which is saying that while the sales have been good because they have happened at the factory gate, the dealers are posting a completely different picture. I think Morgan Stanley in their note are saying that for your case individually, channel checks are suggesting that even the retail trends are looking very, very strong. Therefore, are we looking at a strong October and a strong November continuing for you, which may or may not be the case for some of the other auto companies?
Well, one has to separate out the festival skew effect when we look at what happens in October, November. So our sense is that we will end the year at a 10-12% industry growth, which is what we were talking about at the beginning of the year. And we should not read 52% growth in 1 month to imply that that's going to be the trend for the remaining months. I think what one can read out of this is that there is robustness in rural demand. The impression that people may be having, that consumption at equipment level or white goods level has completely disappeared, I don't think that's anywhere near true. and we would still hold on to our annual industry projection of 10 to 12%.
But that's then a very meager number that you do for the rest of the year, right? Because if you do 8% for the remainder of FY18, you will still clock in about 15%. But you are mentioning a year number of 10 to 12%.
Yeah, because there is a huge industry weight in especially in tractors in first half. Because of the seasonality of buying. So June is normally a very big month, and then the festival time is a very big month, and then the industry is on a much lower base in the balance months. So now one has to wait and see what happens post October, and especially as a lot of the realization of the crop of the kharif crop right now will start coming in. That's not yet come in because harvesting has got delayed by about 20 odd days into October. So that money realization will come in, and then that kind of will be a determinant of how the balance months will go. So right now we're not changing 10 to 12% as a forecast, and maybe in a month or two maybe the appropriate time to revise it, if at all.
Okay, fair enough. I think everything you've said, though, points to continued buoyancy in demand. One quick final question, Rajesh, more specific to, let's say, the product spread that you were able to sell in the festival month. If you could give us more detail on that. The market share gains, any more detail on that, and whether you have a target for the year end or further gains to be had by the year end?
Yeah, so from our standpoint, both on brand Swaraj and Mahindra, our specific products have done very well. Under Mahindra brand specifically, we launched Jivo in just three states yet, which is Maharashtra, Gujarat, Karnataka. And that's a 25 or 24 horsepower four-wheel drive product, horticulture specific. That's been doing very, very well. And we had our earlier launches, Yuvo, Novo, both did very well, and some specific models in Swaraj have also done very well. So, many of our new products, new introductions have got a very good response in the market, which is enabling our market share story. As I mentioned to you, we've gained about 0.4% market share. This year we are now at 43.6 for the first half. Which we believe is a very strong and healthy position between two brands of Mahindra and Swaraj. And unfortunately can't share a target for the year, but we do hope to keep our market share gain momentum going.
Rajesh, excellent having you here on Bloomberg Quint for the very first time and at the back of a great festival season.
Thanks.
Thank you so much for your time this morning.
Right, we'll move on to another auto segment. September turned out to be a strong month for Bajaj Auto as well, with the Pune-based automaker posting a 14% rise in total sales. Let's get across to Kevin Desa, who's the CFO at Bajaj Auto, to understand what the nature of this sales performance was. Thanks, Kevin. Good morning. Appreciate you joining us on Bloomberg Quint. I guess, Kevin, the first question to you is if you'd seen improved performance in this month, was it a factor of an improved market or an improved market share? Which of the two played a larger role?
I think it is a combination of both. One is definitely there's been an increase in the market share. We had started the year at a market share of 15%. In September, we are very close to 20%, and that's why full hope and the thing of reaching our target of 24% exited March is very much there. If you see the 14% growth that we're talking at the company level, it has been met with growth across all segments, whether in the motorcycles where we have grown by 7% and exports has been by 21%. And what's very good is that the commercial vehicles have done exceedingly well with a growth of 37% in the domestic market. So it's an all-round growth.
What was happening in the market? Was this, festive season related, restocking related? Because again, we seem to continue to bump into this disconnect between the macro narrative and what we're hearing from companies in the auto space.
Well, as far as we are concerned, I think it was not so much as a destocking or restocking, whichever way you look at it, because as far as we see it, the first 3 months actually our market share went off a little bit low because of the confusion that industry faced with the Bharat Forge norms conversion. I think September is a normal month for everybody in the industry in terms of the stocking that is taking place. The festive seasons have been good. Navratri for us, the Navratri period on a like-to-like comparison has been extremely positive, with us showing a 45% growth on the 10 months of the current Navratri versus the last 10 months. What is very, very satisfying for us is that the success of the new products, primarily I'm talking of the CT Electric Start and the Platina, which have done very, very well. In the Pulsar family also, we have launched the ANS, and that has done extremely well. So we are actually running short supply on the Platinas and the Pulsars.
Mr. Disa, good morning. There is a Goldman Sachs note which says that their channel checks with dealers seems to suggest that while it was a good month, there has been some decline that certain pockets of dealers have shown, some large dealers. What's happening on the ground? I mean, would October, looking at the commentary that you've given, would October continue to look as robust? And were the channel checks that some of the brokerages have done a bit of an aberration?
No, I think October would be like you see the shift in the festive season. So I think for us, at least in the month of October, you will see us continuing to show growth of about 7 to 8% in the domestic market. But as you go into the next half, that is November, December, etc., you will see us growing by almost about 20%. And this is because, among other things, the success of the products and the base effect. As you recollect, the last year at the same time, it was this entire confusion where Bajaj Auto had come out with a Bharat Forge norms, whereas the others were still selling at the Bharat 3 norms. So therefore, we had rectified our stocks last year. Therefore, for me, while I've shown a 7% growth in September, in H2, I would show a growth of almost about 20% plus in terms of the domestic motorcycle share.
Wow, okay. That is one. Two, in terms of market share, I heard you mention at the start of the interaction in response to Ida's question that you've gained market share. What's been the cumulative gain, if you can shed some light there, and what's the expectation for the rest of the year?
Our market share, which was approximately about 15% for the period, remains by and large at that point. If you're talking the 16-17 on a whole year basis. Now, I'm saying that from September, we have moved up to 20% at the exit point as against the 15.5% that we had seen in April. So there's a 4% gain in market share.
Okay. And one question from my end is on exports. I know that this month exports showed a very interesting trend, very interesting uptick as well. Can that continue? Again, there's a conflicting picture there if you look at what brokerages are saying versus what is being reported by you as a company. The reporting numbers are fairly good.
Yeah, so if you see the exports and if you see, for example, even the last month we had shown an export of 134,000 numbers. In July, we had shown an export of 121,000 numbers, and this has gone up to 147,000 numbers. So this is not a flash in the pan. This is a rising trend and driven primarily by a lot of emerging markets that we have seeded in the past. So today, we export to 70 countries. We have fairly de-risked our entire exports, and almost about 20% of our sales come from the new market. What is very encouraging for us is Nigeria has stabilized, economy has stabilized, everything seems to be reasonably out of the dumps. And therefore, last month we did about 25,000 motorcycles to Nigeria. This month we have done another 25,000 for Nigeria. And therefore, as we go forward, we see Nigeria stabilizing at about 28 to 30,000 numbers. Hence, for us, as we have said, that we have done approximately over 800,000 numbers in this first half. We see the growth going to closer to about 900,000 in the second half, helping us touch a 1.7 million vehicles, which will be the highest exports for the company and ahead of our target.
I just wanted to, Kevin, come back to the India demand scenario as the final question and get some insight from you on whether you're seeing uniform increase in demand across the country. Are there pockets where you're seeing improved demand? Anything that you can give us as a read on whether you think this will be sustained demand through the course of the year?
Well, the demand seems to be sustained across. So for us, fortunately, we had the CTES and the Platina, which is taking care of the rural demand very well, because the price is very attractive. The feature is value for money for that. So the rural part of the country is taken care of by the ES, CT and the Platina, whereas urban India continues to go for the Pulsar. So to that extent, we are very comfortable in the geographical spread of our products and the markets.
And did you have to deep discount this festival season to be able to get stock moving?
Not at all, not at all. In fact, as normally in the festive season, you do have these issues of a little bit of 1,000 off here and there, which is always shared with the dealers and the company, and which is very much a part of the admin budget that is factored in for the whole year. So there's nothing that's gone out. It's only a shift from maybe the newspaper to directly to the customer.
Okay, because, some of the dealers we were checking with yesterday seemed to suggest, and this is not specifically for your company, but across the auto sector, that discounts were a little deeper this time round, and that in fact they were seeing a little bit of over restocking by manufacturers, in an effort to compensate for the GST-led destocking, and this was putting some pressure on dealer financing as well. Any evidence of that on your end? Anything that you can tell us about your dealer network responding to this?
As far as Bajaj is concerned, we have always followed the practice of billing exactly what is retailed. So for us, there's never been a situation where I bill more than what is retailed. In September, definitely we would have billed more because of the fact that in October there'll be the factory closure, whether the demands will be higher. So you need to look at September and October in totality, and you will see that our billing will be equal to the retail. At any point of time, we would not have more than 4.5 to 5 weeks stock.
All right, we'll leave it there, Kevin. You've had a good festival season. Thank you very much for joining us here on
Thank
Bloomberg.
you for having me over.
Thanks. That's the view coming in from both, I think, M&M, and we've got rural demand there. Amazing, and Bajaj, both rural and urban demand, and they're just painting a much prettier picture than any of us would have imagined.
Amazing. If the MPC was listening to this and looking at the data, I mean, I'm not sure which way they would go. I mean, seriously,
but
right?
But Ira, haven't you been pointing out that if there was anything standing up in this economy, it has been consumption demand, right?
That's true. But then, the premise was that all this, the demonetization, GST, etc., is, hitting that segment potentially coming via the informal sector, which may have been disrupted. But if what these guys are saying is right, and, this is showing up in their hard numbers, then perhaps that was, as a lot of people, as the RBI had initially said, to be fair to them, entirely transient. So if it is, then, sure, let's stick to, the chosen path, which is ease where required.
In which case the needle moves from rate cut to...
From 50-50 rate cut to 75 no rate cut, 25
yeah,
rate
or
cut,
hold
maybe.
and no rate cut or something like that, right? Or wait till December.
Yeah.
Really, it will have to be the GST revenue read, won't it?
I mean,
because that's the only idea of government finances.
Yeah, it'll be one of the most important inputs.
And you would reckon until then, maybe the RBI will play it safe. Let's not show bravado and try and do too much with rates. Let's wait for data to come in.
Yep, we'll also see the full effect of the Fed unwinding starting then, right?
Yeah.
Because that's when we start seeing their balance sheet slowly starting to shrink. That'll have impact on flows, on the rupee, on everything else. So maybe you hold your firepower, as you said, for December. But who knows? We'll know this afternoon at 2:30. Ira will be at the Reserve Bank of India, and we have special coverage planned for you all through the afternoon on Bloomberg Quint Live. For now, it's a wrap on Indian Open. Up next is the FNO Show.